Join us for a special session on the three strongest support and resistance patterns presented by guest speaker Desmond Leong from the Forex Army. Whether you're new to trading or looking to sharpen your edge, this session promises practical insights you can apply right away. Before we dive in, let me introduce IG for those who are new to us. IG Group was founded in 1974 and has spent 50 years at the forefront of trading innovation. In Singapore, we've been operating since 2006 as IG Asia Private Limited, and we're proud to be the number one CFD and FX broker here. More to share on our promotion now. So if you're considering starting your trading journey, now is a great time. New clients can receive up to 2088 when opening and funding a CFD account with IG. It's very simple. Simply create your account, fund it with 1000, and begin trading to unlock your rewards. You can scan the QR code here on the screen to find out more. Just give it a few moments and then we'll kickstart the webinar. Just a reminder, the content shared today is strictly for educational purposes and does not constitute investment advice. As always, trading CFDs carries risks, losses can exceed deposits, and if you're ever in doubt, we encourage you to consult an independent financial advisor. And now it's my pleasure to introduce our guest speaker, Desmond Leong. So Desmond is the CEO of Rocket and an award-winning trader, well known for his technical analysis and research. His team has been recognized multiple times as finalists for the Technical Analyst Awards in FX and equity research. So today, he'll be sharing his view on the three strongest support and resistance patterns. Desmond, over to you.
All right. All right. Cool. Thanks, Rafael. All right, for the intro. All right. So, just to kick off, right, what I like to encourage everyone to do is to make the most out of the chat and question, right, function of this go-to webinar, right? So, in one of the panels, you all should see this thing called chat, right? I'm going to send a message there, right? I like, and when you're sending a message, you should have the ability to select the drop down and select everyone, right? So uh, let me see, yeah, to select everyone. So don't, you can choose to share it to organizers only, or to share it to everyone. The good thing if you share with everyone is that if we are we all can benefit from each other's questions, right? So sometimes us answering a question that another person has, right? That is a place. The chat section is a place where you can use it. Can we just try to send something through first? If you're able to see this message. Yeah, is anyone able to see this message? Or maybe you have it under questions, right? Maybe you have it under questions. Okay, I can see Anders. He says that he can see. Yep, you can see the message, right? I'm not sure if everyone has the. Okay, Thomas, I can see. Yeah, I can see you. I can see you raising your answering. All right, you all. Okay, cool. I can see you all use. I can see you all use the questions, right? We can see but can't respond. No worries, right? I can see Mary, I can see Belle, right? Christopher, right? All good, all good. Maybe you can't see the. There's no permission to send messages, but you can submit questions. So I can see a lot of questions here, right? I can I can see. Okay, I need to expand this screen because there's so many messages coming through. Okay, cannot type directly into the message. Rafael, if you can help me take a look at it, it could be a setup somewhere that is preventing people from sending messages into the chat section.
Yep, I'll have a
Yeah.
look on that. But I think in the meantime, If people have questions
Yep.
during the webinar, they can ask it straight away in the questions box.
Perfect. Yeah. So I think the chat is not working, but the questions is working. So I can see all your questions, right? Rafael will take a look and see whether it's able to enable the to enable the questions part, right? We have more than 100 people here, so if a lot of questions coming through, right? Yeah, I'll do my best to answer them. All right. What I want to encourage everyone to do is that I have another screen. I literally have another screen open over here, just monitoring the questions that are coming through. So feel free, and I encourage everyone to ask as many questions as possible, because usually we don't have. If you were in the last previous webinar, we didn't have time to answer all the questions, right? So yeah, uh, take a chance to. Okay, I can expand this. Yeah, take a chance to ask all the questions. All right. Now, without further ado, right, I'm going to share my screen. All right. Is everyone able to see my screen here? Um, it should say IG exclusive webinar, three strongest support and resistance patterns. Is everyone able to see it? Okay, maybe there's a okay, all right, okay, I can see. Okay, I see you guys replying now. All right, I see Kelvin, I see Adrian, I see Christopher. Perfect, perfect. Right, now let's start today's session. All right, so this is a three-part series, right? In our previous webinar, we talk about like the advanced reverse five-step reversal strategy. In one of the things about five-step reversal strategy, the core of it, right? The core of a very strong reversal trading strategy is actually being able to identify proper support and resistance, right? There's so many, and let's hope this is the definitive webinar that teaches you all what good support and resistance is. I'll go into the psychology of why each of these patterns is good, right? And of course, because I think it's not only important to know the patterns, but understand why it is important, right? Please. So Dimi is saying that my voice is a little bit soft. Um, can I just check with everyone else if the sound, if the loudness of my voice is okay? Yeah, is the loudness of my voice okay, or do you need it to be louder, or does Dimi need to turn up the volume? Let me see. It's okay, perfect. All right, volume's okay. No worries, no worries. So Demi, I think you might need to turn on the turn up the volume a bit so you can hear me louder. Okay, now let's rock and roll. Okay. I mean, quick introduction of myself. It's a more updated picture of me, I guess. Right, Desmond Leong, founder and CEO of Rocket. Right, prop firm trader. My team is if any of you guys took the prop firm challenges, we've passed it collectively more than 15 times as a team. No, sorry, actually, it's more than 20 times as a team, right? Finalists for Best FX and Best Equity Research 2019, 2020, 2021 for the very prestigious Technical Analyst Awards, right? We've stopped running for them, right, in recent years, right? But we've proven ourselves. And if there's anything that I'd like to share with you all, is that in today's webinar, I'm not selling you anything, right? This webinar is completely paid for by IG, or very generously, right? So what I'm hoping to do is to teach everyone as much as possible, help everyone trade better, right? And really grasp the concept of not only support and resistance, but one of the big agendas today is how to avoid the false breakouts. How to know what's a good breakout and know what's a false breakout. Okay, so and of course, if there's any encouragement I'd like to share with the hundreds of you all over here is that you don't need you don't need to work 10 years in Wall Street You know, you don't need to have a master's in financial engineering to be a good trader, right? For me myself, I'm a very young guy. I'm 35 years old, right? And I mean, I've been trading for the better part of 10 years, right? I've made a lot of mistakes in that better part of 10 years. Hoping to hoping to like teach you from those mistakes, right? So hopefully it can help you shortcut your learning. And if there's one thing I learned in trading is that, you know, the funny thing is that in trading there is it is very different from the world of academia, right? It's not right and wrong. You know, in when you're reading a textbook, you know, there's right and wrong. You know, this is the right answer, this is the wrong answer, right? In trading, it's so scary because you read something online on Baby Pips or Forex Factory, or you read this book someone wrote, and it can be completely wrong, but it's so well written that you think it's correct, right? You go and you read what strategy someone wrote, and you're like, oh, this makes sense, and you spend 1 year learning something like SMC or ICT, trading strategy, and it turns out that maybe it doesn't work that well. So that's the scary thing about trading. You know, you can be right, you can be wrong, and can be really wrong, right? I got a Jason saying, sorry, go to webinar is unable to resize, slightly small when using chat. Chat took up a lot of space. Please use Zoom next time. All right, that's a feedback for Raphael for us to use Zoom next time. Jason, I think you might be able to toggle, right? There might be some toggle options for you to swap between like bigger and smaller size, right? So please try to take a look at that. All right. So anyway, disclaimer, remember everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade. All right. Now, without further ado, let's look at the agenda for today. Oh yeah, sorry. This is just the certificate of proof that once you pass one of these really tough prop firm challenges, to give you a cert, right? Passed it multiple times myself, but yeah, it's just proof that it can be done. It's quite easy to be done. You don't need to be a genius to do it, right? You just need to what learn from the right people, learn the right things, and avoid the wrong things. Because that's the scary thing about trading. There's so much peddlers of trading strategies that cost $3,000 or $5,000, right, for you to learn, but most of them don't really work, right? I'm sharing all of this today with you all from very unbiased perspective. I hope you learn the most out of it, right? And this, what I'm going to teach you today, forms the basis of a lot of my trading strategies, right? If there are the top three things I feel is most important: knowing good support and resistance, knowing how to use Fibonacci, right, and knowing how to do proper correlation, right? So hopefully I'll cover two of it today: support and resistance and correlation masterclass, right? And then we have one more webinar to teach the Fibonacci. Okay, so now let's begin. Support and resistance. Don't worry too much about the text that you see on the screen. Let me see if I can draw it over here for you. Okay, so what you want to take note of is that support is anything that is below price. Resistance is anything that is above price. Okay, support is anything that is below price. Think about it. What is below you right now, right? That is your support. You know, the ground is supporting you, and anything that is above you that you need to push to kind of exert force to go through, that is resistance, right? So anything that is below is support. Anything that is above is resistance. I will be using this terminology, right? I'll be using this terminology throughout the rest of the webinar. So just take note, when I'm talking about support, I'm talking about anything that is below current price. I'm talking about resistance. It is anything that is above current price. I can see Ray saying, are there people? Is anyone else experiencing any problems like connecting to go to webinar and they are attempting to reconnect now? Is anyone else experiencing that problem? Right. Please send it in our question that is now a chat. Yeah, a chat section, so we can help Ray. All right, I think he's having some problems there. But all right, so what we want to look for, of course, is this big concept. Just give me a second. Yeah, this big concept of okay, no problem. Sorry, Ray, I think no one else is experiencing any problem, so it could be an internet connection. All right. So the key thing that you want to look for support and resistance, right, is that you want to look for these big levels. Okay, what are called significant levels, right? Because they are the first indication of where the reversals are happening. You don't want to look for these like small little ones in between, right? They're not that effective. Okay. Now, just give me a second while I find a way to erase all the drawings. Okay. Okay. So next slide. This is what I mean by insignificant swings. All right. So when you're drawing support and resistance, the first thing that you want to take note of is that you want to avoid all these really insignificant swings, right? These are, you look at the market, it's choppy, it's going up and down in small little waves. These are not significant swings. Okay. For example, this is a significant swing. This might be multiple significant swings up here, but the in-between fluctuations, don't let it trick you. Okay, those are not worth looking at. Edwin asks, is there yeah, Edwin asks if any recommendation for time frames to use, right? Any recommendation for time frames to use? No. Usually, okay, if I were to suggest, I would personally trade on the H1, H4 time frame, right? Because it filters out a lot of the known unknown, like the news events, the fluctuations that the news that can occur with news events that can wipe you out. So I usually trade on the 1 hour and the 4 hour time frame, okay, because yeah, it has a little bit more immunity or resistance towards the day-to-day news events, that you can have the best analysis in the world, but if a news event comes in like the non-farm payroll, right, it doesn't care, right? It just whip you out. So I tend to trade on the H1 and H4 time frames. Okay, now this is another example of insignificant swings. You come in here, look at that. It's so difficult to find a single like strong big level. Even here, right, if you look at one thing and the reason why I included this example is that if you see a big wick over here, try to avoid it, right? Try to avoid it, especially a long wick, because the truth of the matter is a long wick over here is on one broker is going to be different from a long wick on another broker, which might end here. Another broker might end over here. Another broker might end over here. Because the long wick means that there's a very big news event. Maybe it's like it caused price to spike down and go up. So what happens is that support and resistance works well when the whole world is looking at the same support and resistance, right? If you have a wick, right, usually it differs from broker to broker. So while you are thinking that you're going in at the low over here, it might not be the same low on another broker because the price fit is different, right? So that will weaken the strength of that major swing low, right? So when you see very, very long wicks, I tend to avoid it. So this is a useful tip, right, for you all to think about. This is the example of what I call significant swings, right? These swings are a lot better, right? You can clearly see big movements, right? These are the ones that we want to use when we're drawing support and resistance, all right? So just take note of this. Not all support and resistance levels are the same, right? We got a question from Hong asking about the pivot indicator, right? Using R123, S123. Nope, don't use it. R123, S123 has no indication on where the true graphical support and resistance is. I don't even use it in my trading. Okay, that's just mathematical calculations, right? It's not exactly true support and resistance levels. Okay, now let's take a look at another example of significant swings. Right, this is another example. Very nice swing high over here. Very nice swing high. Very nice swing high. Very nice swing low. You avoid the kind of stuff in between, right? Go for the major swing highs and swing lows. Anytime you pull up a chart, yeah, is very it can be very obvious to you when you look at the chart where the big swing highs and big swing lows are. If we have time at the end of this webinar, I'll be more than glad to go through some of it with you. Okay, yeah, so these are the ones that we want to look for. Now, what we want to do next, right? All right, it's simple. This one I'll skip, right? Going for major swing low, major swing high, the first big kind of support and resistance that you want to look for is the multi-swing. Multi-swing, right, is when you identify one nice swing high, you identify another nice swing high, and identify another nice swing high. Usually I go for three, minimum two, but if it's better, my preferred case is at least three, right? And if this all line up at the same level, you know that this is a nice resistance. It's the same thing, multi-swing low, three swing lows that reach the same level, right? This tends to be nice. A nice little swing low, right? Means that price is actually respecting that level. Of course, the trick is to actually look at, sometimes you need to edit price, filter out the wicks a bit. And let me show you how that works. Okay, this is an example, right? You notice, oh, sorry. This is an example. You notice that first, right? I have the first swing high resistance over here. Okay, then I start moving it back. All right, I have two swing highs now. You notice at this point here that I have another swing high over here and another swing high over here. So it might not look like it lines up with this level, right? Because this is the swing high over here, this is the swing high. But here's the trick. When it comes to support and resistance levels, what you're looking for is actually a zone, not a specific level, right? And when you notice there are wicks, like you notice there are wicks over here, right? Notice there are candlestick wicks. Notice there are candlestick wicks over here. This gives you a little bit more freedom to actually pick the bottom, right? Pick where the candles are closing instead. Okay, let me show you an example of this in action. So what I usually do, I take a level and I move it back. I'll see how far back you can go, right? Sorry. Yep, I will move it back. There it is. I'll move it further back. There it is. Move it further back. There it is. Then I rejig it a bit, and there you go. Right? I have one swing high over here, and I have this area. So you then highlight this area as a potential resistance area. Right? Don't be too caught up in finding the perfect single line. It's rare that happens, and even rarer when it comes to FX. Because when FX, you have different brokers, different price feed. It's very different from the stock market, where everyone's looking at the same levels, right? Different brokers, different price feed. It causes the markets to behave a little bit differently, right? So you need to add in a little bit of tolerance when it comes to identifying support and resistance levels, all right? So personally, at least two times, right? But preferably three, four times is amazing, right? Do not be fooled by the wicks that you see. Okay, now next slide. Pullback and the overlap, really, really powerful. Okay, now how do you find a pullback? You can only find a pullback once you've properly identified the support and resistance. Let me explain to you in a graphical form. Imagine you see price bounce up once, price bounce up twice, right? Then you start drawing this line over here, right? You got this little line over here saying this looks like a nice support level, okay? And price is coming all the way down. Now, we change it to blue. As price comes down here, right? As price comes down all the way to here, this level, what do you think people will be doing? Most people will be thinking that price would likely make a little bounce, right? Price would likely make a little bounce up here. And when you think that price is going to make a bounce, what do? You buy, right? You buy thinking that price will bounce. But when price breaks this level and starts to go down, That's where people start going on a roller coaster of emotions, right? They'll be like, "Oh my goodness gracious me! I should have put a stop loss. I should not have bought there. I thought price was going to bounce. Let me hold on to my position." Some people will say, "Let me dollar cost average down," right? They start getting into more positions over here, right? Hoping that price will suddenly start to rise back up, and it finally starts to go back up. They start to believe that there's hope in the world, there's a light at the end of the tunnel, right? And it starts to come back up, come back up, come back up, and it touches over here again. What do you think people are going to do when it reaches this, right? Once it reaches this level, a lot of people that originally sold over here, right? A lot of people that originally bought over here, they are they were taken for the ride of their life to go down, and is all the way back up here. They're gonna close off their positions. They'll be like, "Whew, that was close. I'm not gonna trade anymore. I'm gonna close off my positions." And to close off your long positions, you need to sell, and that influx of selling activity pushes prices down. In this sense, right? It pushes prices down. Not only do we have the people that are selling, closing off their positions, you have the breakout traders, who are buying on the pullback, because it's a very nice pullback, right? You got people who are closing off positions here, right? And you got the momentum traders, because they are trading, they notice that price is finally coming down, notice that price has broke a key level, they're starting to load on onto their position, right? Hence, this level here, this is called the pullback resistance. You're looking for this thing. And for this to work, you need very good support. You need to set the trap. Okay? You need to set the trap. So once the trap is set, whole bunch of people think that price is going to bounce from here, right? And they get in. It doesn't bounce, it breaks out mercilessly, right? And then it makes a pullback. That is the pullback. All right. Now, I got some questions coming in from Luke. What if it's a sudden spike that jumps and touches the resistance, but closes far below it? A sudden spike that jumps and touches the resistance. Yes, I do consider it too. I do consider it too, right? Sunil asked, "Do you use multiple time frames?" Yes, I do. I usually use 2 time frames when it comes to trading, Sunil. My rule of thumb when it comes to trading is that I will, if I'm using the 1 hour chart, I will times 4, right? And use a 4 hour chart as my higher time frame. Okay. If I'm using the 15-minute chart to trade, I will times 4, right? Times 4. What is that? That will be the 1 hour chart. 1 hour chart. If I'm using the 4 hour chart, I'll times 4. That will roughly give you the 1 day chart. Okay. So that's a rule of thumb. I always times 4. There is no point in using a 1 day time frame to look at a 15-minute chart. Honestly, it's too far away. It's way too far away. It's like trying to forecast what the weather is 1 week later. It's not gonna work. It's better when it's close by. You want to go out today, look at the sky in the morning, see, is it there? Okay, is the sky okay? Sky dark? Yeah, sky dark. Maybe I won't go to the beach, right? So there's it extends beyond your locus of control. If you use like when you use multi time frames, a lot of people end up with paralysis where they use a 15-minute chart and they look at a 1 hour chart, which then needs to reference the 4 hour chart, which then needs to reference the 1 day chart, which then needs to reference the 1 week chart. Makes no sense. All right, just look at times 4, 1 time frame higher. Okay. Okay. What time frame do you use to see support and resistance? When do you buy resistance? Okay, I'll answer Anders' question later. Jason, I tend to use the 1 hour and the 4 hour charts. Okay. Let me see Anders' question. When do you buy at resistance versus wait to see if you break through? In other words, trigger long entry. All right. Do you enter at price? Good question. We're going to cover that later. So Anders is asking a question like when do we decide to trade? We'll touch on that later. Okay. So stay tuned. All right. So this is an example of an overlap, right? Very nice, right? Price broke out from this level. This is now what we call the pullback resistance. All right. Bonus points if it lines up with Fibonacci. This is in our next webinar, right? 38% Fibonacci retracement lining up with a very nice pullback resistance, right? And a short-term 61.8 retracement. This is a juicy setup. All right, very juicy setup. Highlight a nice resistance level over there, right? Watch price play out, touches that level and reverse. Of course, this is a perfect setup that I've recorded for you. But if you notice, if you go in trading and you start looking at this, you will notice a lot of this happening, right? And there are reasons for that, right? There are reasons for that. Always look for the trap and lace in Fibonacci, lace in short-term Fibonacci, lace in Fibonacci projection, put in, maybe if you can look at a little bit of Elliott wave structure over here, put in a little bit of momentum. You got yourself a very nice trade, right? Trading is not easy, right? I'll try my best to teach you guys everything that I know, of course, but it's not easy, but it is possible. Okay, you don't need to yeah, you don't need to dive too deep into crazy theories, right? I'll tell you what worked for me. I'll tell you what worked for us, passing prop firm challenges 20 times. So easy, right? But yeah, it's uh, the trick is in understanding it, learning it right. I can teach you support and resistance now, but if you apply it wrong, it won't work, right? So anyway, some additional examples. This was what I meant in a better format, right? Nice little reversal, nice little reversal, nice little reversal. What's everyone gonna do? Everyone thinks it's gonna drop, right? Bam, it doesn't drop. If it breaks out, especially like this, if you notice that the breakout is very strong, very merciless, even better, right? That really catches people by surprise. Imagine a trader, they see that happening, they most retail traders they start panicking, right? They start breaking out in cold sweat. They're like, oh man, maybe I should have used that stop loss, right? Or they start moving their stop loss, and yeah, they're taken for a ride of their life, and price goes all the way down, all the way down. By the time it comes down here, they're gonna close off their position, they're gonna wipe off their sweat, right? They say, I need my sleep, right? Close it off. When you close off a short position, you go long, right? And that pushes prices up. This is an example of that in action. Okay. The same goes for pullback resistance. The same goes for pullback resistance. Nice little bounce that we're seeing over here, right? Nice little bounce, nice little bounce, nice little bounce. People think it's gonna bounce, but bam, it goes down. Okay, same reason. All right, same explanation. Okay, let me see. Does it mean that once it breaks the support, short big time? Nope. Short answer to that, nope. Long answer later on. How does by Kelvin? How to spot sudden breakout trend? Let me share with that in the correlation masterclass at the end of this webinar. How do you draw fib levels on different time frame? Well, same thing. To draw any effective Fibonacci level, find a big swing high, find a big swing low, right? Then draw the Fibonacci here, draw it all the way down to here. But if you're talking about different time frames, right? The key thing, maybe I'll show you an example later for Fibonacci, right? This is actually another class by itself, but you can lace in higher time frame and lower time frame Fibonacci. I'll try to show it to you later, all right, Kev? Depending on the time we have. So, pullback resistance example. Well, this is yeah, maybe I show you an example over here. Pullback resistance, right? So major bounce that happened over here, right? By the time price comes down, you can see it fluctuating over here. What you're looking for this clean break over here. Once the clean break happens, wait for the reversal. Wait for the reversal, price touch it, of course, added benefit of the nice Ichimoku cloud momentum over here, right? And then what you look for is to sell for prices going down. How do you know if the trade will work out in your favor, right? A big part of that is correlation, which I'll be sharing with you in a bit. I draw fib levels from the wicks, top and bottom of wicks, okay? Because wicks are universal. wicks, the highs and lows are universal. Close and open always differs, right? On one time frame or another. That'll be covered in the Fibonacci class. All right. So what is the overlap, support and resistance? Okay. For overlap, support and resistance, is that price needs to touch. It's a natural evolution. Okay. Let me share with you over here. Remember we had this little thing here where price would come down, everyone think it's going to bounce, it breaks it, right? Then when it comes up here, right, everyone closes off their position and starts selling and it comes down. The moment criteria 1 is met and criteria 2 is met, it becomes this thing called an overlap support and resistance. It goes from pullback to overlap. This is the level where people now agree that is the battleground between support and resistance. Okay, that is all you need to know about overlap support and resistance. Yep, there you go. See, price touch it again, and look for price to reverse again. You can trade a few times off there, but to trade more accurately, you usually need to use a little bit of Fibonacci and correlation to actually get it. Okay. Can support and resistance be considered as areas of supply and demand? And when support and resistance is broken, how do you decide that the momentum continues or the market reverses back? Very good question, Sunil. This is on trade entry later. Yes, supply and resistance can be considered as areas of supply and demand. The term is used interchangeably. When you see supply and demand, it usually means support and resistance. The key thing that you want to look for is you want to look for graphical support and resistance. Look for those significant swing lows. Look for those significant swing highs that I mentioned at the start of this webinar. Okay, now moving on. Overlap support and resistance. Really quick example over here. Very nice, right? Come back up. Yeah, touch it over here. Right, I won't waste too much time on this, right? Same thing, come back up, reverse down. All right, so that is the overlap support and resistance. Not a very good example. Now we'll combine pullback and overlap levels. Let me show you the story of a pullback and an overlap. Right, so this is a big swing high resistance, as we've noticed. Right, now what happens when price comes back up here? Everyone thinks it's going down. It breaks out. Now, the moment price surpasses the swing high resistance, it is now known as the pullback support. So this is called the little pullback support over here, right? Pullback support, pullback support. When price finally touches it and bounces off, it goes from the pullback support to the overlap support. Okay, this means price respected it once over here, and the second condition over here, it respected it twice. Then it has fulfilled what is called the overlap. Okay, when exiting the short in this example, when you exit trade. Okay, trade management, we'll touch on it later, Anders. Okay, we'll touch on it later. So this is the anatomy of pullback resistance. Okay, same thing as you will notice over here, right? Price swing high, nice little swing high, not breaking out, bam, it goes out. And this, my friend, is the pullback support that you want to get in on, right? You can see it takes off very nicely from there. Okay, then of course, once price bounces off it, it becomes an overlap support. Okay, I want you to train your eyes to look for this, right? Train your eyes to look for this kind of setups. Okay, same thing here. I won't, like, this is very nice because it's like if you look at it over here, right? Reversal, 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 finally break out with a nice big candle, wait for price to come back, make the bounce, go up. Okay, now I still have some time left. It's important that I teach you guys the concept of correlation, right? So Anders is asking how long back in the charts can support and resistance. Yes, Kev, in a simple no. Pullback support is resistance turn support. Overlap is when that resistance turn support has another reaction of it. In simpler terms, right? In simpler terms, right? Different people call it differently. Okay. Now, and there's how far back it goes, right? It depends on the time frame that you use. Okay. It depends on the time frame that you use. But the it becomes less effective. Let me see if I have my chart over here. I have a chart. I do want to touch on correlation. Um, I do want to touch on correlation. Let me see if I can show you some examples here. Okay, later on, later on. I have to teach correlation first. All right, I have to teach correlation because if not, you all won't know how to filter out a false breakout. Okay. Um, Now, Karim, the previous slide. I'm not sure is this the previous slide that you're referring to. All right. Okay. Three, two, one. All right. Go. Okay. So different types of correlation. Right. We have the positive correlation over here. Very, very super duper important. Okay. Positive correlation. Sorry, give me a second over here. I just need to move this thing down. So, it disappeared. Yeah, positive correlation. The concept of positive correlation is that price tends to move in tandem with each other. You know, one goes up, one goes down, one goes up and down, one goes up and down, right? Positive correlation, very, very important because positive correlation is one of the things that will teach you how to avoid that false breakout. Okay? This is one of the secret sources that I really want you all to know is using correlation. Not many people know how to use it. And every time you're wondering if a trade is actually seeing a breakout, a real breakout, or a false breakout, a lot of it comes down to correlation. Okay, let me expand on that a little bit more. Okay, this is now positive correlation. The negative correlation is just it moving in opposite directions, right? But let's talk about this over here. Two fairly positively correlated pairs. You notice their movements. Oh, shoots. Yeah, you notice their movements tend to be a little bit opposite of each other, right? One goes down, one goes up. Now, see this chart over here made a bullish breakout, right? You can see the chart over here made a bullish breakout after this resistance. But on the same chart, right, the support over here, it did not make a breakout, okay? Because ideally, this would have been where the breakout is, okay? But it had not made the bearish breakout yet, right? So when you notice something like this usually results in a lower probability breakout. I will show you live examples of it. Maybe I'll show you another example over here where the trade actually plays out. Okay, let me see. Yeah. Okay, like two strongly negatively correlated pairs, euro dollar and dollar franc. Notice this one goes down, this one goes up, this one goes up, this one goes down, right? They tend to move in opposite directions. Okay, now we have this case where euro dollar, right? Nice little swing high here, come down, right? And I think the swing high goes all the way back to here. You can see nice swing high here, nice swing high here, nice swing high here, nice swing high here. This is lining up to be a very nice setup. Price breaks out and it makes a pullback. So this is ideally the part where we're looking for the pullback support, right? Look at the same thing on dollar franc. Price bounced nicely, price bounced nicely, price breaks it, and is making a pullback resistance, then it's supposed to come down. If this one goes up, this one goes down. So that means if this one were to make a breakout, a pullback support bounce, this one will make a breakout, a pullback resistance to reverse. They are both looking like they agree with each other, right? This one is on the pullback, this one's on the pullback. Yes, because this one and this one, right, euro dollar and dollar franc, both are in tandem. That means, right, we have a higher chance of this breakout being true. Okay. Okay, Ryan is asking like, how do you choose which pair to trade in this example? You can trade both, honestly. You can split your risk between both, right? But usually, I will pick the one that has a clearer breakout. For me, the clearer breakout is probably dollar franc, right? I really like the two very obvious bounce over here. Euro dollar, right? It's a little bit choppier, right? I guess euro dollar is a little bit choppier. Like, oh, sorry, yeah, euro dollar, a little bit choppier. I like the more significant bounces over here. So in this case, I tend to trade dollar franc instead. Okay. So when do you enter exit your pullback overlap chart? Very good trade management, right? I covered that in a previous webinar actually, but there's a whole topic itself on trade management, which I'm not sure if we have the time to cover today. I do want to touch on this point, right? So euro dollar and dollar franc, another, so they tend to be negatively correlated, right? So when you zoom in a little bit, you notice that euro dollar, right? Euro dollar looks like is what I want to teach you about this example is that it's not always plain support and resistance, plain horizontal support and resistance. You can apply this, right? You can apply this in the form of like trend lines too. Like you see, most people are drawing like, oh, reversal, 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 right? It looks like it made a breakout. So I am expecting it to go up, correct? I'm expecting it to go up. For dollar franc, for it to be true, what I'm looking for is this thing over here, right? Dollar franc reverses, reverses. It has one more reversal, and it looks like if you notice this candle over here, right? It breaks out, and the next candle actually closes very strongly down. It's failure to break out. So if they happen at the same time, how do you have time to react? It's not about having time to react. It's about confirming, right? Whether in this case, is it a real breakout or not? If it's a real breakout, then you look for a good entry point, right? That falls under our trade management lesson, scaling into positions, waiting for ideal entry, right? Or getting in risky, but then closing fast or moving to break even fast. That's another topic on trade management EC. But this failure to break out suggests that price will be going down, which gives you more confidence, right? That price, you're going to see a successful breakout over here. Of course, then the next idea is from a trading strategy point of view, how do you get in on the trade itself? Do you wait for a retracement back to the entry, or do you wait for a close and go right away? Right? That's another trading strategy. But my style is a reversal trading strategy, focuses a lot on pending orders, right? So I don't usually trade this strategy, but I do want to show you how you can use this correlation to filter and find successful breakouts. Okay, because what happens from here, right? You can see that's a successful breakout and a strong reversal. It all happens, right? It all happens at this candle over here, right? When the reversal happened, and you can then have a more confident prediction or forecast that euro dollar is going to break out. How you use it for your strategy, I don't, up to you, right? But this is one of the techniques you can use to apply correlation whenever you want to play a breakout. Look for a correlated pair. Now, how do you find a correlated pair? I do need to share this with you. Um, this one over here. Yes. Go and search for my FX book correlation. Okay. And what you want to do when you reach the correlation table is you want to, depending on your time frame, right? Depending on your time frame, if you're trading the 1 hour charts, maybe a 1 day time frame is enough. If you're trading the 4 hour charts, maybe a 1 week time frame. So I'm going to use 1 week time frame. Okay. Now, what you want to look for is to find correlations that are lower and higher. So lower than negative 90%, higher than 90%. All right. This will give you the instruments where you have the, I think let me try to go for 1 month. The instruments where you have the best so-called strongest negative correlation and positive correlation. Let's look at this example. CAD yen and Aussie yen. In the last 1 month, they've been moving pretty similarly with each other. Let's see if that's true. Aussie yen and CAD yen. All right. Come to here. Right. Maybe I do a Aussie yen over here. And what I'm going to do is I'm going to, sorry, I just don't want the watermark. So we got Aussie yen and we now have CAD yen. Okay. I'm going to put it in the form of a candle. So in the last 1 month, they have been moving very similarly, right? At least it tells us in the last 1 month, right? Let's see, when was the last 1 month? Give me a second over here. Oh, sorry, last 1 month will be in May, right? Since the beginning of May, about here. You notice, right? When price is going down and going up, you got them going down and going up, right? You got it going down and going up. You got it going down and you got going up. Caps out over here, down, up, down, up, down, up, down, up. All right, this is the meaning of positive correlation. That also means that when you're expecting a breakout on one, you should be expecting a breakout on the other. So, for example, if we were to try to use it in an example over here, okay, this is going to be a bad example, not the best, but yeah, looking at like a breakout over here, right? So you would draw the same over here. So in this case, depending on the way you trade trend lines, you think that price is going to make a breakout over here, right? It's going to go up. But at the same time, this instrument, CAD yen down here, which is supposed to move in tandem with you, is right at a key resistance. So it's likely that it will reverse. So in this case, you have one that says is up and one that says is down. So if you have all the different instruments to trade, you might then exercise more caution to say, hey, I am prepared to lose money today, yo. Right? I'm just gonna stick out of this trade. I'm gonna stay away from this trade because I would have preferred if CAD yen was over here, it made a breakout, and both of them are making a breakout to suggest that prices could go up. This is an example of positive correlation. Now let's look at negative correlation. We have Aussie dollar and dollar CAD. Okay, we got the Aussie dollar and we have dollar CAD over here. Okay, it tells me that in the last 1 month, things have been pretty moving in the opposite direction. So maybe from the beginning of May over here, right? Kind of true, I guess, right? One nice high, one nice low, one nice high, one nice low, one nice high, one nice low. Okay, kinda. So if I was trading and I notice a very nice resistance level over here, right? I notice a very nice resistance level. You can see price has reverse, 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 reverse. If I think it's going to reverse from here again, come down, then what I'll be doing is I'll be trying to find a support level over here. I can only find this support over here. Not that great. Not that great. Right? So if price happens to both be over here, let's just say, we fast forward a bit and price is now on, if we fast forward a bit and price is over here, when price makes this breakout over here and it also happens to make this breakout, then I'm a little bit more confident that we could be seeing a breakout, because they move in opposite directions, right? Because they are strongly negatively correlated. So that's how you actually forecast if what you're seeing based on support and resistance that I've shown you, right? Is it going to be likely going to be a successful breakout or false breakout? Remember, there are so many different instruments to trade. There's so many different time frames to trade. So don't ever, if you want to be successful in trading, right, is learning to say no more than trying to force yourself to say yes. If the setup doesn't look good, not perfect, just walk away from it. There's so many more trading instruments you can look at. Okay, now I of course I'm very wary of time. I hope I answered most of your questions here. There will be another webinar, right, that covers advanced Fibonacci retracements, right, that will show you a combination of not only support and resistance, but also combining it with Fibonacci, looking for ideal entry levels, right, stop loss, take profit placements, right, combining it with correlation to find, to really look for really nice setups. They'll be coming up in the next webinar. All right, so I do want to take this short moment to run a quick poll with everyone, right? It's just some feedback on my webinar that, of course, IG is going to be looking at, right? So let me see. I launched poll, right? The first one is, how do you rate today's webinar, right? Feel free to vote whether it's 1, 2, 3, 4, 5 stars. 5 being great, 1 being terrible. Don't worry if you vote it being terrible. I promise I won't hunt you down, right? But this is of course for their feedback, right? For to collect feedback to find how do you find this webinar. If it's good, then maybe you might have more sessions in the future, and if it's bad, you can just leave us some feedback over time. All right. So yeah, please, if you may, of course, please let me know, right? How you find today's webinar, right? I can share the results with you all later, right? And if there's a reason why you left a tree or two, right? Thankfully, there's no ones yet, right? Yeah. Let me know, right, in the comments on the question box, why you felt it that way, and I will do my best to improve it, of course. All right. Thank you. Well, I guess the good thing, I'm going to end this webinar, end this poll in just a couple of seconds, right? Yeah, I'm just going to end this poll a couple of seconds, right? Okay, we got about 80%, so not that bad, I guess. We voted 4 and 5. Thank you very much, everyone. Right. The next poll, which we'll be doing, right, is actually um, the next poll is actually to get an idea on the topics of webinars which you prefer. Feel free to vote as many as you want, but if there's one that you prefer, right? If there's one that you prefer, right? Maybe you can yeah, you can select one choice instead of 3 choices, right? So we know what kind of webinars that we can craft for you. Is it going to be basic webinars? Do you want Forex 101? What is Forex and stuff? Or are you more interested in the tough stuff? Like what I'm teaching you today is almost kind of like intermediate concepts. The advanced ones are going to be the strategies. All right, the strategies are the ones where it gets a lot more intense. I'll be showing you how to apply harmonics, Elliott wave theory, correlation, support and resistance, looking at trades as they evolve and play itself out, right? What kind of what will you be most interested in, right? So please share with me, and of course we'll craft the webinars, right, in the future to suit it, right? Thank you, Robbie, right? It's very kind of you, right? Uh, Thank you, Karim, right? William, I know the time is a bit short, maybe a longer webinar in the future, 1.5 hours, right? Mm, Only thing, amount of time to get, yeah, Ryan. Okay, I got it, Ryan. Yeah, we try to start faster next time, right? How to understand fundamentals, a little bit tougher, Very good side. All right, thanks everyone. I'll be sharing the results. Most of you all actually voted right for advanced, right? Most of you all actually voted for advanced and intermediate concepts. So this is something which Raphael will be taking note of, right? So when we are, well, actually almost, yeah, 70% of you all voted for advanced. Very fun stuff, right? Very fun stuff. Okay. And the last poll I have for you, right? The last poll I have for you is more of like the preferred frequency of webinars, right? This is just to get a gauge, what kind of, how frequent do you want webinars to be? Do you want it to be like once a week? Do you like it once a month, twice a week, twice a month? Yeah, correct. Once a week, yeah, twice. I thought there was some overlaps there, but yeah, if you may share a little bit about that, so we get a better idea on like what kind of webinar frequency is something which you can more or less get behind. It'll be useful for us to craft like a webinar series. All right. Um, why do you use zero point 0.8 and -7, which is not common practice? Ethan, I actually use -27 more. I don't use 88% Fibo, right? -27 is actually a very, very good Fibonacci retracement. It's one of my favorites. It's one of my favorites. I call it the Nike tick Fibonacci retracement. Super duper effective, right? -27. Yeah, right. Thank you, Hong. Very, very nice feedback. I'll make sure IG sees it, right? All right, all right. So I'm going to end today's the voting, right? It seems that 50% of you all voted for once a week, right? Followed by 23% who voted for 2 times a month. So yeah, it seems like once a week to like 2 times a month is yeah, actually once a week seems the most likely one. Okay. Um, what is my advice to a new trader? Good question from Kelvin, right? My personal advice to a new trader is go open an account with IG. Kidding, kidding, right? I mean, yes, of course, do that. But one of the things that I want to suggest is that trade with a small amount of live funds versus being on a demo account, right? $100 live account will give you more emotional um, training, right? Psychological training than a full-fledged 100,000 demo account, right? Start with a small account; it gives you a lot more experience. Okay, I think the last thing that I want to share with, yeah, everyone, I think that we finished today's webinar, is that we'll be giving out a oh, maybe I can share my screen over here real quick. Best support and resistance indicator for MT4, right? Find us on number one over there, right? We got one of the best support and resistance indicators, which we'll be giving out for free as part of the promotion. Everything that I taught you today, multi-swing low, overlap, pullbacks, multi-time frame, it'll all be given to you. It works on MT4. I'm creating a version for MT5, which will also be included for you, right? It'll be given in the promotion that Raphael will be sharing with you all later. So be sure to grab the promotion, right? People actually pay $148 for this, right? We've sold more than I think 3 or 4 thousand of them. So it remains number one on Google for a good reason. It's a really, really good indicator. Be sure to grab a free copy, fully sponsored by IG, right? In the thing later, in the promotion later, right? I thank you all very, very much for sitting throughout today's webinar, for the good reviews that you gave, right? I really appreciate it, right? And of course, there'll be another poll at the end of today's webinar. Please take a time to fill it up too. And it has been a pleasure seeing you all. Be sure to look out for the next webinar, right? Where I'll be covering Fibonacci in depth. Super fun, super confusing, super advanced, right? But it'll be a very, very fun, it'll be a very, very fun session that will help you really trade better. All right. Yes, I understand, Paul. Right, I know it doesn't work. Now over to you, Raphael. Thank you very much.
Thank you so much,
Right.
Desmond, for that insightful session. And also thank you to everyone who has submitted your questions. Really greatly appreciate all the engagement we got during this session, and also apologies if we haven't been able to get to your question. So as mentioned by Desmond, we're sharing this exclusive indicator promotion for all our attendees today, and it's really simple to get. So after the webinar, we'll be sending an email to everyone here for you to register your interest in this promotion. So within that email, you'll find instructions on what you need to do. Essentially, you'll have to, if you don't have an IG account yet, you have to make an IG account, and then deposit 1,000 and make one qualifying trade. So within that email itself, you also need to let us know your MT4 account so we can get this free MT4 indicator unlocked on your account. For new IG users, people who don't have an IG account yet, we're sweetening the deal even more. So when you follow the same requirements, you get $200 worth of Takashimaya vouchers as well, in addition to the MT4 indicator. So deadline for this promotion will be 11 June. So essentially you have a week to complete the above requirements to get the MT4 account, and also for new users to get the $200 worth of Takashimaya vouchers. Yep, and just to reiterate the welcome bonus, in addition to the $200 Taka vouchers and the MT4 indicator, you can take part in our welcome bonus as well, where you can get up to $2,000 in welcome bonus based on your notional value traded. So you can scan the QR code here to find out more about this welcome bonus promotion. Also found more information in the email we'll send across to you. Yep, I see a question from Jason. So for existing IG accounts, existing users, you simply have to uh, do the deposit and trade to get the MT4 indicator. Yep, and to finish off, last but not least, as mentioned earlier by Desmond, it would be great to have your feedback so that we can craft better content for you in future webinars. So please, if you can take some time to scan the QR code here to share your feedback, it will be greatly appreciated. Just leave this for a few moments. And thank you once again for everyone who has left their feedback and attended today's session. Just give it a few more moments. And also thank you for all the feedback. We'll definitely have a look at how we can execute these webinars better for you, everyone. Thank you. we'll leave this on for about a couple more minutes. And thank you everyone who has submitted their responses. And have a pleasant evening, everyone. Okay, we'll be closing off the webinar now. Thank you everyone once again for joining the webinar and stay tuned for the next one with Desmond on the 18th of June. You can sign up for that webinar on our website now, and in that webinar, he'll be going through the Fibonacci analysis. So see you then. Have a good night, everyone.